Mortgage rates have been cut by the big banks, and at the same time, home sale numbers are down across the country. Three of Canada's biggest banks, BMO, CIBC, and RBC, have all slashed their fixed mortgage rates across all terms by around 10 to 15 basis points. These rate reductions move most 3 to 5 year fixed rates below 5%, definitely providing some relief for people renewing mortgages over the next couple months. 5-year fixed rates are now available around 4.50%, okay? That's pretty good. I mean, better than what it was before for sure. For an uninsured mortgage, if you're putting down 20+% for the down payment, renewal rates range from about 4.79 to about 4.99% for a 5-year fixed term. And these are at A lenders, top lenders across the board. Let's look at the factors that are driving these rate cuts. These rate cuts follow a nearly 40 basis point drop in Canadian bond yields, which lead fixed mortgage rate pricing. The bond yields trade every day if you look them up, and they get priced in by all economic information currently available. Lower than expected inflation data in Canada and the US has caused bond yields to decline, impacting mortgage rates. As the 10-year US Treasury yield falls, 5-year Government of Canada bond yields follow suit, tends to follow that market. All right, so what does this mean for borrowers? The lower rates provide relief for the 76% of mortgage holders facing renewal in the 12 months who are anxious about the process. We talked about that, I believe, last week, how people are just feeling anxious. They're feeling nervous for the renewal. This is good, right? We're seeing some relief for fixed rates coming in. However, borrowers need to, again, make sure you negotiate for the best rate, as lenders may not offer their lowest rate, right? So you got to push the lender a little bit, talk to a broker, reach out to me or another broker who can actually push and negotiate for you, get the best rate possible. Only 8% of borrowers negotiate their rate at the last renewal, right? Or 41% accepted that initial rate offered in that letter they get from their lender. They just take it right away. They don't negotiate. You got to negotiate. Now, let's look at the rate differentiation among different lenders, okay? Mortgage experts predict greater rate differentiation between lenders as they compete for uninsurable versus insurable mortgages to target fatter margins, okay? Again, an uninsured mortgage is a mortgage that is above 20% down payment. An insured mortgage is when you put down less than 20%, right? You get mortgage insurance, that's an insured mortgage. Some continued rate declines are possible over the next 30 to 60 days, but a pullback may occur if economic data worsens, right? So we'll keep you up to date on that on this channel for sure. Now, we also have to talk about Canadian home sales that have slid again, okay, in May. Existing home sales in Canada fell 0.6% in May from April and are down 5.9% from a year ago, right? This is according to the Canadian Real Estate Association. Sales are now down 13% below the 10-year average as elevated borrowing costs and Bank of Canada uncertainty kept buyers on the sidelines. So looking at different regions, declines were most pronounced in New Brunswick, Saskatchewan, Quebec, and Ontario. Rising inventory levels, and I'm sure you could see this. I mean, maybe in your neighborhood, if you live in a bigger market, you'll probably see that. You'll see more houses listed for sale, but they're not selling, okay? That's just because the pool of buyers is smaller. Elevated borrowing costs make it difficult for people to step in and compete for these listings. New listings rose 0.5% month over month, pushing Korea's months of inventory measure up to 4.4 from 4.2 in April. And it says this increase in listings could signal renewed seller confidence or growing financial distress among some owners, right? So in my opinion, it's actually a better situation for buyers right now. Whereas if we're getting a lot more listings coming on the market, there's just more options for buyers to come in, maybe get better pricing on something they really like. They can negotiate more, put more conditions in the contract, right? For financing, for inspection, for whatever else they want to negotiate with. Downward pressure on home prices, okay? If there's more listings, that's going to mean prices are going to come down, okay? By how much? We'll have to wait and see. The weakening sales to new listings ratio put downward pressure on prices. The average national home price fell 4% year over year. So what can we expect for the rest of this month in June? We can expect weakening sales to new listings ratio to put downward prices. So prices are probably going to come down over this month. The MLS home price index slipped again down 2.4% from a year ago. So we can expect to see a little more buyer confidence, right? That rates are ready to fall. Maybe a little more people starting to jump in, buy something. But a further rate relief is likely, setting the stage for a stronger second half of 2024. So we may see stronger activity, but again, in my opinion, the rate cut that we're seeing, it may not be enough. We may need more cuts. We need more financial relief for people to come in, to bid for properties. And of course, what I'm going to do now is show a few graphs of the average sale price in Canada and also the different cities. And you can kind of see what's happening right now. And I do personally believe that we're going to see more listings. I think prices will come down, but at the same time, those buyers that may come in may start to just fuel the fire a bit. If you guys have any questions about financing, looking at different properties, getting pre-approvals, seeing what rate you qualify for, please reach out to me. I will leave my contact information down below. And of course, I will see you guys in the next video. Take care.